Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thank you very much for listening to this video today, and as usual, please don't forget to this video and please subscribe to my channel. That is always really helpful. Thank you very much. So before I get started, I just want to say that I'm sorry it's been a little while since my last video. I've been a little bit busy recently, but I thought it was really important to try to update you today. I'm going to be going over a little bit about what happened last week, but also going into a little bit more of a historical context about where we are in the market. I will try to do videos a little bit more often in the future in order to be able to provide my really valued investors a lot of information that they can get from me. So thank you very much. So to get started, last week was a pretty good week in the market for me overall, and our portfolio was up about 3.08%, which was pretty good. If we compare that with the other benchmarks, such as the Nasdaq was up about 2.4% last week, as well as the S&P 500, which was up about 2.2%, and Bitcoin was up about 0.5%. So our portfolio did outperform the major benchmarks last week, and it's been going pretty well on a year-to-date basis as well. So if we look at 2023 year to date, our portfolio is up about 21.58% as from Monday. So that's a pretty good result over the week, and we bounced back pretty well from 2022, which was a difficult year. So I'm pretty happy at that. If we compare that to the S&P 500, which was up about 17.6%, we are outperforming that. The Nasdaq is up about 35%, but it does have some very different properties to it, really, because there's a lot of weighting of some of the major technology companies which bounced back strongly from last year, such as Nvidia and some other companies which are pretty heavily weighted in the Nasdaq. So overall, I'm pretty happy with how our portfolio is performing so far this year. And the last one I just want to compare it to, which is Bitcoin, which is up 124.26. But it has to be said that Bitcoin was very close to the cycle lows at the beginning of 2023. So a lot of that bounce back is because of the weakness last year in Bitcoin and cryptocurrency. So overall, I'm pretty happy with the performance of our portfolio. Just some kind of more information that I wanted to provide to you. Our portfolio, we haven't been doing as many short-term positions, and that is because we're in a little bit of no man's land at the moment in terms of kind of trading. We're not near the highs, and we bounce back pretty much off those lows. So I only tend to do the short-term trades in pretty volatile, and when volatile markets, and also when the positions are at certain prices, whether they be at lows, highs, or they're a little bit out of kilter with the rest of the markets and there's some good upside. So I will go back to doing those positions soon, but only when appropriate. I also have closed a couple of positions. So I closed a small position in a profit on 𝗱𝗲𝗄, which is cryptocurrency, last week at an 18% profit. I might wait for a little bit of a pullback, and I might come in and have an even longer term position in 𝗱𝗲𝗄. We already kept our existing long-term position in 𝗱𝗲𝗄, but it's probably something that I want to add to on the dips. Also, I closed a longer term position in 𝗣𝗲𝗄𝗃, which is a Vietnamese kind of hedge fund which are invested in a lot of different sectors in Vietnam. And I closed it really because I've had it open for a pretty significant period of time, and it doesn't really move that much. although I'm expecting a lot of things from the Vietnam economy over multiple decades, I thought that the money could be used a lot better effect in other positions, which I think are going to move a lot quicker in the next, let's say, a year to 18 months. I took a nice profit on that, but also I collected dividends for quite a long period of time as well. So it was a worthwhile position, but it's probably something where I feel like I can get better returns elsewhere. I've also opened up starter positions in Cosmos, also known as Atom. It's a project that I'm pretty bullish on moving forward. I think that it's going to, in this next bull run, it's going to do extremely well. And there's a lot of kind of projects building off it, etc. And I do plan on dips maybe to increase that position and make it a more major part of our portfolio. I've also added to Solana as well, and I'm very bullish on Solana. So I was a little bit worried about Solana last year, and that was mainly because of the kind of overhang of FTX and the amount of SOL tokens that they had as part of their liquidation, etc. at FTX. But I think a lot of that overhang is now out of the way, and Solana is a really solid ecosystem. They're continuing to build projects on Solana chain, from DEXs to NFT projects to things that speed up the network, staking, etc. So I'm very excited about Solana moving forward for this next bull run, and I think I will increase that position a little bit slowly over time, and I think that it can do really well in 2024 and 2025. So that's a little bit about my reasoning of why I've added to those. So we'll move on now to the news from last week, and the Nasdaq and the S&P finished up for the week, and it's hit that kind of crucial 4,500 barrier for the first time since September. There's also some reasonably good news to do with inflation and CPI, and that's the latest CPI figure remained unchanged in October. And that is mainly driven by a sharp drop in energy costs. So we know that things went, the CPI went down for quite a long period in 2022. However, the energy prices spiked up again, and we saw a few months of those increasing. However, they've started to balance out again, and that is because energy prices have started to drop again. We've also seen the core, which doesn't include food and energy, that has risen by 0.2%, and that brings the year-over-year increase to 4%, and that's the slowest pace in 2 years. So what you can really see is that they're starting to make significant inroads into tackling and combating inflation, which has been pretty decent for the markets over the last couple of weeks, for example. If we look at other data as well from the US, we can see that retail sales have fallen just 0.1% in October, and actually that was less than is expected. Mainly that's due to a reduction in the oil prices and also in auto sales. And then we've also seen home-related spending on things such as building materials have continued to decline, and this is showing consumers have continued to increase spending at things like services such as bars and restaurants, and also online, but they are cutting back in certain areas. So what we are seeing is some pretty buoyant and slightly better than expected economic figures. So I think we're in a fairly good place overall in the economy. Obviously, interest rates have been held up pretty high for a significant period of time. A lot of those things do have lagging effects, but I think we're coming to a period where we're pretty close to max interest rates, and I think most of the markets are starting to price in that kind of Q1, Q2 2024 2024, we might start to see some small decreases in the interest rates. We also saw some pretty interesting news last week, and it caused a lot of speculation, etc., around OpenAI. And what happened was Sam Altman was actually ousted as the CEO by the board of OpenAI. This caused a lot of fury among the internet world and actually inside OpenAI, in which a lot of the staff members supported Sam Altman and said that it was a really terrible thing that they have left him out. So what has happened since then is Sam Altman is going to be working for Microsoft on the kind of AI projects and their AI initiatives in the future. And OpenAI have actually appointed a new CEO, which is the former CEO of Twitch. He is going to be taking over the day-to-day operations of OpenAI as a foundation. It'll be pretty interesting to see how that kind of works out over the time, because although OpenAI have the project and have the product of ChatGPT, obviously we know that it's only as good as how the AI is updated and the team that are working on it in the future. And it'll be pretty interesting to see. We might see a lot of the OpenAI staff leave and go and work with Sam Altman or for other AI projects. So it'd be pretty interesting to keep an eye on that. But it will be safe to say that it was a publicity nightmare from OpenAI, and that they've probably been significantly harmed from it. In Europe, we've also seen that President Christine Lagarde, president of the ECB, has said that policymakers are expecting inflation to pick up at the start of next year. And that's mainly because the base effects have started to drop out of the annual comparison. So even if inflation does start to accelerate again, what we'll probably see is it doesn't necessarily mean that another interest rate hike may or may not be required. I think they're going to be very reactive to what happens with the data and the economic data in Europe. We've also seen the latest data in Europe has also confirmed that the annual inflation rate in the Eurozone has fallen to 2.9% in October. And actually that is the lowest level since July 2021. But you have been warned that might pick up again a little bit over subsequent months. We also seen in the UK, we've seen annual consumer price inflation in the UK has slowed to more than expected to 4.6% in October, and that is from the 6.7% in September. And that is mainly prompting financial markets to increase their bets on interest rate cuts next year. So yeah, so the markets are expecting, just like the US, that there might be some small interest rate cuts next year in the UK. If we move on to China now, we can also see that China, the data that's been released offers a mixed picture of what's happening in the Chinese economy. We are seeing industrial production and retail sales have grown more than forecasted last month, and that is from a year earlier. And that is mainly because we have seen fixed asset investment growth have missed their estimates due to a dip in infrastructure growth, the real estate investment, etc. We all know what happened in real estate last year in China and the big overhang of empty properties, etc., and the bursting of the real estate bubble. So that's continuing to have some effects. We've also seen the People's Bank of China. They've continued to inject more stimulus into the economy. So over 1.45 trillion renminbi into the system, into medium-term lending facilities. And really what we're starting to see is we're seeing some quantitative easing in the economy in China, whereas obviously in Europe and the US, we've seen more quantitative tightening to bring down inflation. the biggest problem in China is the growth is slowing significantly. However, we're starting to see lots of good opportunities in the China market as we see valuations continue to decrease. So it hasn't really been a really great year for Chinese stocks, but I think that they will start to stabilize over time, and we will start to see some big opportunities come out of China. But it's pretty important to balance it appropriately in our portfolio, which I think we're doing. So on to our top 3 performing stocks of last week. The top performing stock in our portfolio last week was Marsdens, and this is a UK pub chain brewery, and that was up about 14.36%. And Marsdens has done pretty well this year so far in our portfolio. The second best performing stock of last week was Magnite, which is an advertising sell-side platform, and that is up about 13.36% for the week. And then the third best performing stock for last week is the Medical Properties Trust, which is a REIT which deals with hospital buildings and hospital facilities, etc. And that done pretty well last week, which was up about 12.99%. So a lot of our stocks performed pretty well last week, which added to our strong performance. So if we move on to our Death by Charts edition, I'm just going to go over a couple of charts. So the chart to the left, what we are seeing is US rents versus US shelter CPI. As you all know, that has a big lagging effect. So what we have actually seen is the shelter CPI has continued to reduce as those lagging effects are now starting to take place of those rising interest rates. So now down to about 6.7%, down from the peak of 8.2 earlier this year. And it's actually the shelter CPI has now declined for 7 consecutive months. We're expecting that to continue again even further so over the next couple of months, as less people are basically buying new properties because they don't want to lock in these very high interest rates for a long period of time. The chart to the right that I wanted to show you is the year-on-year change in terms of CPI, in terms of the breakdown. And what is helping to drive the rate down to 3.2% are a number of areas. So we're seeing year-on-year declines in fuel, gas, utilities, used cars are also down, gasoline is down, and we've also seen medical care down. And all with the exception of transportation and shelter, all of the major CPI components have a lower rate than they did in June 2022. So that's all kind of adding to the reduction in inflation. And I guess it's, can the Fed get very close to the 2% target before kind of something breaks in the economy, which is also known as a soft landing. So we'll be monitoring that over the next couple of months. The third chart that I just wanted to show you is the US real average hourly earnings. And what you can see now is that with wages are now outpacing inflation on a year-on-year basis, and this is for the 6th straight consecutive month. This is a great sign for American workers, and actually I hope this continues because this actually shows that the markets are pretty healthy and employment is good. The chart to the right that I wanted to show you is the US producer price index, year-on-year change, and what we can see is that US producer prices were down 0.5% in October and increased just 1.3% over the year. And this is well below consensus estimates for a 0.1% monthly increase and a 2% year-on-year increase. So again, the peak was in March 2022 at about 11.7%. That's coming down as well. So that's another thing that's pointing through to really what the US producer price index does. It shows you, gives you a snapshot really of what the CPI might be like a little bit later, because this is also known as factory gate inflation, etc. So it means that the cost of producing things is not increasing as much as it was previously. So this is a good sign for future inflation. So as we move on now to the crypto news and views, and just as usual, things have been pretty exciting for Bitcoin and crypto overall. So I'm just going to go through a few of those things. So as we know, Bitcoin has done pretty well this year, up over 120 something percent for the year, bounced off those lows in 2022. And really what I think we are now is we're in the very early stages of the bull market. And I think it's quite easy to think about Bitcoin and think, oh, we're still pretty far off the all-time highs. But what you need to know is that the all-time highs happen for a very small period of time in the in the 4-year cycle. So if you look at things over a longer time frame, we bounced off pretty well off those lows, and now we are doing very well. And I think we're actually above where we have been in other 4-year cycles at this time in the cycle. So sitting at kind of that 36 to 37 to 38 range is a really big achievement. And I think a lot of that is because of the speculation around the approval of the Bitcoin spot ETF and the likelihood that it will be approved by kind of January 2024, which is the main consensus. We're also coming up pretty close as well to the halving, probably only 4 or 5 months away from the Bitcoin halving, which is expected in either April or May 2024. So really what we're doing is we're expecting a lot more demand, which I think is the main factor through the ETF, spot ETF, which will require custodians to have to buy spot Bitcoin ETFs. So the demand will significantly increase for institutions. It will make it a lot easier for them to buy Bitcoin through your BlackRocks, through your Fidelities, through your 𝗲𝗀𝗃𝗃𝗃, all the different providers that have submitted an application. So we're expecting to see significant inflows into Bitcoin, but at the same time, we will see a little bit of a supply shock as well, because the Bitcoin halving will mean that there's the half amount of the rewards that for miners to be able to get rewards for mining Bitcoin. And what this leads to is a little bit of a supply shock, because there's less Bitcoin that are being sold by miners to cover their overall costs. And again, this helps to add to the supply shock that happens, and we could see again a big increase in price. Not expecting that to happen until hit all-time highs again until probably 2024. Usually in the past it's happened between kind of 4 to 6 months after the halving. We've seen those all-time highs. Might be a little bit different this time, and the cycle might be sped up a little bit, and that might be because of the Bitcoin spot ETF. If it is approved in January or sooner, we could see that kind of little bit speed up the cycle. But anyway, it's all looking very good for Bitcoin, but do expect, even in the bull cycle, I have to be really honest and upfront with all of my copiers, and that is that Bitcoin and crypto won't go all one way. It won't be up only. Even in crypto bull cycles, what we see, I think in the last crypto bull cycle, we saw 5 or 6 20% downturns in the market throughout the whole bull cycle. So it won't be up only, there will be some volatility. But if you ask me honestly, I think volatility is pretty good for Bitcoin because it allows us to be able to make these significant increases in the price. So a couple of pieces of news I wanted to bring to you from last week and early this week, and that is the Ethereum ETF applications were officially launched. There's been a lot of speculation about Ethereum ETF filings, and now they have finally been lodged. I'm actually expecting those Ethereum ETFs. They will come after the Bitcoin spot ETFs, but I think because Ethereum, they already have been approved with futures ETF, I think that they're going to argue a very similar case to the Bitcoin spot ETFs because of the grayscale case, in which the judge said that they shouldn't be able to treat Bitcoin or ETFs, futures ETFs, any differently to the way they should treat Bitcoin spot ETFs. And I think it's going to be very similar for Ethereum spot ETFs, considering that the Ethereum futures ETF have already been launched. We could be expecting some approvals for those Ethereum ETFs sometime in 2024, probably towards the back end of it. So I think that's obviously very bullish as well for Ethereum. Some other news that I wanted to bring you from earlier on this week as well is the Department of Justice have just announced that they plan to give a significant fine to Binance for many different things, such as money laundering charges. They also said that they didn't require, in the very early days, Binance didn't require customers to do KYC, etc., and they were selling to US clients without permission, etc. And what they have done really is come to an agreement where Binance have to pay a fine of about $3 billion. And what they've also had to do is the CEO of Binance, 𝗳𝗶𝗱𝗄, has had to step down from his position. And what they've actually done is they've appointed a new CEO who has a long background, not only within Binance, but has a long background in dealing with kind of regulators in Dubai, Singapore, and some other countries. So really what you're seeing is a move to try and be as compliant with regulatory standards around the world as possible. Whereas in the very early days of Binance, they focused really on trying to grow the company as much as possible. So they're going to be taking a very different approach. I personally think this is actually pretty good news. The market's taken this a little bit hard the last day or two, but I actually think it's pretty good news moving forward, because there was a lot of FUD around the two large overhangs which people feared in crypto and Bitcoin. And one of those is Binance. And I think one of the scenarios which people really didn't want to see is systemic risk. So they didn't want to see Binance have significant financial issues and like FTX kind of collapse and not be able to pay customers funds, etc., and freezing funds, etc. And I think what this does show is that the US government, although they have been stifling crypto regulations, they don't want to see systemic risk in the markets. And by taking down Binance completely, what really they would be doing is causing systemic risk and harm overall to the US economy. So they've come up with a happy medium that 𝗳𝗶𝗱 has to step down, they have to pay a significant fine, and in the future they have to abide by regulations. So I think it's positive, because I think there's a lot less systemic risk. And I think what Binance is going to happen in the future is I think that they will exist, but they'll probably take a smaller market share, which again is probably good for crypto because you don't have all of the power with one player. And if anything was to happen to Binance in the future, there'd probably be less risk on the overall market. Take the news that you get from mainstream media with a pinch of salt, because although there are a lot of things in there that are important, you need to see the overall bigger picture of what's good, best for crypto as a whole. The other piece of news that I wanted to bring as well, and that is around the Argentina and the election process. And they've just appointed a new president of Argentina. And it's actually very interesting to see because he is a little bit of a nutcase, but maybe in a good way, because as we know, Argentina have had a lot of problems over the last long time, actually, but especially over the last kind of year or two, where they have seen very high levels of inflation, corruption, etc. And there's a lot of unhappy people. So that led to a new candidate came, which obviously he is a very strong libertarian. He wants to abolish the Argentina peso and the central bank. And I think what's quite likely to happen is we're probably likely to see that they will go into dollarization to begin with. And what that allows Argentina to do, it allows them to remove their own central bank and their own currency, and they'll be operating on the dollar. Very similar to the way El Salvador abolished their currency. I think it was in 2002, and they dollarized. And it also should be known that the new president of Argentina is pretty pro Bitcoin. He has been known to say very positive things about Bitcoin in some of his interviews before, saying it's back to private currencies, which are out of the control of central bankers and corruption, etc. So I wouldn't be overly surprised if, like El Salvador, Argentina did start to put in some kind of pro-Bitcoin type of policies, even may in the future make it legal tender. But again, it's probably be quite likely to go side by side, just like El Salvador is likely to go side by side, where you can use dollars and you can use Bitcoin. And I think that's quite likely to happen. But I think everybody needs to keep their feet on the ground and know that it's not going to be an instantaneous thing where Argentina are going to adopt the Bitcoin standard straight away. But over the long term, I think it's a distinct possibility that Argentina could start to put more Bitcoin in their lives, whether that just be holding Bitcoin on their balance sheet, making it legal tender, making pro Bitcoin rules and regulations to try to attract Bitcoiners and crypto companies to the country. It'd be very interesting to keep that in mind. So lastly, I just wanted to show you a chart really to show you the progress, and I wanted to show you a chart which showed the Bitcoin yearly candles. So what we've seen this year is an increase of over 120%, 122, 124, however recent this chart is. And really, it really shows what we have in terms of kind of these 4-year cycles and in terms of how the performance of Bitcoin does over these 4-year cycles. What you usually see, as is quite clear, is you see these massive down candles which happen after the top of a previous Bitcoin cycle, and then you see these big drawdowns. In 2022, you saw a big drawdown of 64% on Bitcoin, and now that in 2023 is now up over 122 year-to-date basis. And then usually just the year after the halving, so if we look at 2020, as a reference, what you will see after the halving is you start to see that the performance usually starts to improve and increase further. And that is because of, again, of the supply shock from the Bitcoin halving. But again, we're quite likely to see the approval of the Bitcoin spot ETFs as well. And then what happens usually is you do start to see a high again in that cycle around kind of 16 to 18 months after the halving, in the kind of third and fourth year of the Bitcoin 4-year cycle. So I think it just sums up really well the overall pattern of how the Bitcoin performance plays out. It doesn't mean that it has to play out exactly like it has done in previous cycles, but I think we do see very similar cycles each cycle in terms of the number of days before the highs, the number of days after the highs that it decreases to the lows, etc. And I think it's very important to know how the Bitcoin cycle works and how that often translates into performance. We'll keep an eye on that, but I'm expecting 2024, 2025 to be very good years for Bitcoin. I think we will take out the highs again sometime in 2024. Okay, I'm going to cut it there, but thanks very much for listening to this video. As usual, guys, if you haven't joined my Discord group, please join my Discord group, and we will have regular discussions about things that are going on in the markets. You can ask me any questions that you have at any time, and the link is below in the description of this video. So next week I am going to Abu Dhabi for the Popular Investor Forum. I'm going to meet up with a lot of different popular investors and the management team at eToro. I will try to bring some pictures or some little bit of content, and maybe try to explain some of the detailed discussions that I had during that time at the conference. So I'm very excited about that. So thank you very much and have a great week ahead.